mode.
Hey everybody, Preston Brent here with our Trader Use Group Weekly Roundup. This is for the week ending January 29th, 2016. What a month we had to kick off this year. Let me get another screen up here for you so that I can, looks like I'm playing poker here, doesn't it? It's not. It's a really interesting, unique screen that's tied in with e-signal. But anyway, I'm looking at the charts here. And before we kicked off the day, the market action actually started late last night. Are actually early in the morning China time, when China came out and injected more money into their financial banking system. And then outside of that, Japan came out and announced, the Bank of Japan, that they're moving to negative rates. So that drove the yen down dramatically, but it drove our markets up. More stimulus from both Japan and China. They've been injecting cash into that country for this entire week, to prevent a lot of capital flight. Now, our members know I've been talking about it for a while, and there's going to be some great opportunities and trades coming up, primarily in the currency market. But for now, the equity markets have had a nice little bounce. Yesterday and going into today, I mean, the S&P 500 was up 50 points today. Really amazing. SPX up almost 50 points, about 46, 47 points. I've got on my screen right here the E-mini S&P 500 futures, and it is a weekly chart. Now, what I wanted to show you was I've got the Fibonacci on here that I've shown you guys before. And let me just clear it up just a little bit so that I've got just the Fib on here so that you can see it just a little bit better. But you look at the chart here, going from the March 9 lows to the 2015 May highs, you can see this pullback here. It's not a traditional Fib node, but I use it a lot, 0.236. I know some use 0.27, but this one really, in a strong bull market, the market seemed to pull back and touch this thing very often. You can see we've had some points where we've come very close, but we've never been able to penetrate it. And you can see we made a low here. This was that flash crash in August 24th of 2015. And then we made another low there that was actually, it took out that low right there. And we got a little bit of a bearish divergence going on this weekly chart. So that would suggest, as I've been telling our members, that near term I'm bullish. But intermediate term, maybe longer term, I'm going to be bearish again. I believe we're going to kind of run up here. We're going to run into some resistance right up in this area here, around 1973 area. If we get up there, there's some minor resistance before that, and then we're going to come back and we're going to roll over again. Then the big question is, has the lows already been made here, or will we go lower? Price action is going to help us determine that, price and volume. That we see this thing moving through. But right now, this is the near-term direction, a little bit of an up move that I was talking about. Now, today, a lot of this up move was, you can consider a short squeeze. There were a lot of shorts in this market. So when we had that move up, I think there were a lot of short covering in this rally here. I go down to a daily chart. Now, on this daily chart here, what's really interesting, again, you can see this little bit of a bullish divergence here, where we had this low on that flash crash last August 24th, and the low that we made here, just a little bit of bullish divergence on the daily, not much, but that would suggest we're going to kind of move up into this area right here. Now, as I said before, it'll probably take us up right around this 1970 area, maybe up towards the 80 area, but then we're going to run into a lot of resistance here. If I were to extend this over, you can see where this line is. There's a lot of support there, and then resistance here, support here, and then now it may be a little bit of resistance here. If we can make it up there, and then the rollover. And then the rollover, we got one little interim stop here at 1900 that I'll be watching for. If we take 1900 out early in the week and we attempt to regain it and we don't, then this was nothing more than just a fly in your soup, I guess, and we're going to be working our way back down. And then the question is going to be, is that the low, or will we make lower lows? I think intermediate term, we're going to make lower lows. At least that's the way the price action is showing right now. And yes, we had a huge move up today. But what was really interesting in this big move up, and I'll show it to you here real quick. And let me just get my other indicators on the screen here. Before I show you that, you can see here, this is this resistance zone that I've been telling you about, and running up to about 1980, roughly. That's the top part of the zone. We got a little bit of an interim resistance here at 1946.50. And then if we roll over, we have around this 1900 zone right here that, you know, if I were to extend it over, you'll see that it did provide some support here. Because if you remember, let's look at August. Here we were down here. We came down, right? We came up. That would suggest we come up into this area here. We came down in 1900 held. We came up. We made actually a higher high. We came back down. We blew through 1900. And then we came back up, but that low held. So now the question is this pattern going to repeat itself right here? We're going to be watching that very closely. Patterns do repeat themselves. Fear and greed is always a near-term constant in the markets, and fear and greed kind of exert themselves through these patterns that we see here, both price and volume. So we're going to be watching this very closely, everybody, and we're going to see how this thing plays itself out. But as I said before, what was really interesting in this up move, at least I found fascinating, which tells me that this was a lot of short covering more than anything else, was look at the bond market. There was a lot of movement into bonds. That is a risk off trade. You can see we made new 2016 highs in the bond market today. You can see where we opened 2016 right there, and we opened down here at the beginning of January and we closed near the highs. So that is the month of January, just straight up. And let me tell you, if we are in a mildly bullish market or we're moving up, you would not see that happen in bonds. So there's a lot of fear out in the markets right now. Also, I believe because the Japanese went to a negative interest rate, we've got a lot of foreign money coming into bonds as well. I mean, it's coming in offshore from the Japanese, and then we've got a lot of foreign money coming over from Europe, because the yield on our bonds, especially our 10-year, is just very low. If we look at the yield on the 10-year, let me just turn my thing off here. You can see the yield on the 10-year is now down at 1.93. I mean, just it closed the day at 1.931, below 2%. 2% is kind of the elixir, the magic number here, right in this area right here, and we're below it. So once you get below 2%, there is nobody wanting to take risk in the market. Again, we got money coming in from Japan because they went to negative rates. We got a lot of money coming in from Europe. Our interest rate yields here are much better than they are in Europe. So it does force money into the bonds, which forces them higher. We're going to have some great trades in the bond market this year. We're going to have some great trades in the currency market this year. For our members, I'm going to be laying them out for you, so stand by. It's going to be really interesting. Now, if we look at the currency market, what was really fascinating, take a look at the dollar. Dollar moved up strong today. You can see we're coming up and we're testing these highs here with the dollar. Right there, right there. We're going to make another third attempt. I did say down in this area here, we're probably going to come up and attempt this area here, and then we're going to have a decision point. I think there's going to be a good trade in the dollar as well, guys. And it's not going to be what a lot of you are thinking. For our members, I'm going to go through this in more detail with you on Sunday night, but I think there's going to be some good opportunities here for the U.S. dollar. Now, remember, the dollar, you may say, well, why did the dollar go up today? GDP numbers came out, and they were horrible. They came in at 0.7%, 70 basis points, the first pass or first cut at Q4 GDP here in the U.S. Q3 GDP, it finalized at 2%, so that is going in the wrong direction. Well, the reason why the dollar went up, and you would think that it would go down, because now that pushes the Feds out, and they're not going to want to raise the rates in March, and that's part of the reason why the markets kind of exploded to the upside. But then once the movement started, we just started having a lot of short covering squeeze, and it just started taking over. But a lot of the reason, remember, the U.S. dollar, the futures dollar, is not just that currency. The dollar is measured against a basket of currencies, the euro being over 55%, the yen being a large percentage, and a lot of these currencies were down hard, especially when you go to negative rates with the yen. Those down movements really is what propped the dollar up here, okay? The yen has just had a terrible go of it. So we're going to have some really interesting trades setting up this year as we get through January, as we start working our way through this first quarter here. To me, I just see some wonderful opportunities in the currency market, because if you look at the British pound right here, um, we almost came down and hit my anticipated level of 1.38. I mean, we actually came down to 1.40, so very close to my projected low of the British pound. I think this is going to be a good trade. The other one that I think is going to be a good trade too, believe it or not, is the euro. Now, it's not as ugly as the pound. You can see we've been fairly flat, traded in a tight range. You can see the 2016 high at $1.10, the 2016 low at $1.07. So it's been in a very tight range, but this is going to wind up and break out. And I will review this with our members Sunday night. By the way, if you're not a member, I highly encourage you to come in and join. We're getting a lot of people coming in. They're checking out this free video. They like what they see, and if you've been following me, you know we're pretty close to where the market's going. We've had a really good track record of really using price and volume and key pivots to kind of project where we believe you have an edge in the markets moving forward, at least over the next couple of weeks. Now, if we look at gold, let's take a look at gold. It is in a upward movement. You can see right here, I've got the 2016 high of gold. It made the high just a few days ago. 2016 opening price, this little blue line down here. So we're on the up move there. I'm gonna expect a little bit of weakness in gold, and then we're gonna get stronger again. So that's where I'm looking for gold. And then one of the ones that's really interesting is oil. We've had a very tight correlation between oil and the equity markets. I pointed that out to our members probably over a month and a half or two ago. So we were way ahead of the story, and we've used that to our advantage. Now, if you look at oil right now, I had projected back in September of 2015, believe it or not, I had projected the low of $31 a barrel. And at that time, oil was up around $46 a barrel, okay? We came down from a timing perspective and hit right on the money from a timing perspective. But from a price perspective, it overshot, came all the way down to 26.19. You can see the price right here. And you can see the opening price for the year, 26 open price. We're below it right now. I do believe that this is a bounce, but I do believe that once we get up into this resistance up here, the 2016 open price, the 2016 high is almost on the same day or the very next day, and then it rolled over. I think that's going to serve as very strong resistance for oil up in the upper 30s, and I think it's going to roll back over again. If I do see a roll, then I'm going to be jumping on that to the downside. And for our members, I'll let you know when that's coming. If we look at gasoline futures, another really interesting. We came almost right on my both time and price back when gasoline was way back up in this area up here, guys. It was up around $2 a gallon. Back in the summer of last year, I said we could be coming down in this area, and I had projected a time frame of anywhere from January 20th out to June of 2016, and we came down on the front end side and hit it right around January 20th. We moved up and we're back down again. Didn't go quite as low as I thought. I was calling for 92 cents, and it's around $1.10 right now. But we did come down. It came down to 99 cents, so it's very close. Like oil, I think this is going to get a little bit of a bounce, but you can see the opening price for 2016. You can see the 2015 low price and then the 2016 low price. So again, all of this, we're getting some bullish divergence on here, so I do believe we're going to get a lot of chop down in this area. Eventually, there's going to be some opportunities to the long side, but right now we're going to be selling any rally that I see in both oil and gasoline. We've got some really cool trades setting up in the ag market. I've talked about a few of them that you can do using ETFs or the corn or soybean futures, which is really a good one to use. If we come over and look at volatility, here's something I found very interesting. If we look at the VIX, now if you look at my chart, it's color-coded. So, and the reason why I do this is depending on what zone the VIX is in, I've got 5 zones, each color, 1, 2, 3, 4, and then black up at the top, which is kind of like the black swan event, right? And you can see during that flash crash in August, we actually made it up there intraday to 53.29. and then it just came right back down again. That was that August 24th flash crash. But you can see here with we actually made lower lows this time around, but we didn't quite get up there volatility wise. So this has been a more orderly down move, and then just a lot of shorts being run out of the barn over the past couple of days. But that tells me that we're just going to run out of new long buyers, and it's probably going to roll back again, guys. Take advantage of this up move. But I'm going to be looking to sell this rally if we go much higher. I'm going to look for a signal, and then we're going to jump on it. Okay. There are a lot of really great stocks that I've talked to our members about. I'm going to go through them with you again on Sunday night. Some that are in the $300, $400, $500 range, others in the mid 150, 170, and a few of them in the $40 to $70 range. And the higher range, there's going to be some great option action on them. Some of them have already had earnings. Some of them have not. But there's going to be some great opportunity for selling puts underneath, bull put spreads, put credit spreads, or even call bear call spreads above the price as well. And so we're going to see some of those coming out. Some of these stocks are just very rock solid. In fact, some of these stocks made new highs, new all-time highs today. AT&T was one of them. I told our members this Sunday that the telecommunication subsector is one of the strongest sectors going into earnings, and some of the strong stocks there are both AT&T and Verizon, and AT&T hit all-time highs today. Others did as well. So that's where we're sitting right now, guys. I know it was a very quick update, but I wanted to run through it with you. Again, for our members, we've got a session Sunday night. If you're not a member, I highly encourage you to come on in and check us out. We're getting a lot of members coming on in and joining us. We're an international user group from Asia Pacific area, European zone, North American zone, Latin American zone. Of course, we get a lot of North Americans, but we get a lot of others around as well. We trade equities. We trade options very seriously. We also use options on commodities, which is, by the way, is a good way to hedge your portfolio when you've got a lot of downward action in equities. You want to be into some shorts in equities, but it's also a good way to hedge because commodities have their own life. And they're great ways to trade that too. A wonderful trading vehicle. All right, everybody, have a great weekend, and I will see you for our next Saturday event, our free session for our members. I'll see you Sunday night. If you're not a member, as I said, I highly encourage you to come on in and check us out. I think you'll be very happy. Take care, everybody. Have a great weekend.